Welcome, everyone. So we have Broadcom releasing third earnings results. Shares are up by double digits. And in this video, I considered doing an analysis of the stock. And I'm going to show you how I analyze using AI, using several tools that I think are very useful. And you're going to see the entire process. And hopefully you can learn how to do this analysis yourself, so you don't have to listen to me talking about stocks. Great. So I like to start first by looking at the earnings call. Why? Anything that is positive, any growth driver, is going to be discussed by management during the earnings call. Also, the analysts are going to dive deep into the pain points in the Q&A. So for me, when I approach a new stock, like in my case, Broadcom, which I have to say that I'm not really used to analyzing it. I think I did analysis once, and it was like 3 months ago, so I completely forgot what the company does. It's not in my awareness. So I thought about showing you how I analyze stocks, and hopefully, you can learn something from it. Let's do first an upside analysis. So what I have here is the results of one of my prompts. And if you wonder what prompt it is, don't worry, I'm going to make an app out of this. So you're going to love it. But so far, these are just the results, the outputs. And what we have here is, a summary of everything that was positive. Later on, we're going to see anything that was negative. So we had record results. Q3 revenue up by 22%. Okay, so that's a very nice growth, double-digit growth, and growing 16 billion at this rate is not bad. Adjusted EBITDA 10.7 billion, up 30%. Okay, that's nice profitability. Possibly this has to do with the cost efficiencies from VMware. As you know, the company, I'm going to show you, I think it was in 2023 when they did the acquisition. November 2023. So they completed the acquisition of VMware, which ended up in the infrastructure segment of the company. And when you have a look at the overall revenue of Broadcom, this is the consolidated revenue, and I'm going to use a quarterly time frame. You're going to be able to see the acquisition. So you see the quarter ending in February 24, the revenue spiked by 34%. And this is inorganic. Yeah, so it's not that the company suddenly demand spiked up for their products, particularly AI-related products. No, it's just the VMware acquisition. So, of course, February 2025 is the first quarter that is using a one-to-one comparison. So we're comparing growth there to growth in February 24 when you already had VMware. So now we're back at organic growth. The value is nice. It's 22%. Let's see, what else do we have there? So bookings were extremely strong. Consolidated backlog reached a record of 110 billion. Not bad. So given that the company is pulling 16 billion a quarter, how much is that? It's almost 10 years. Let me pull up a calculator quickly. So, of course, some of you can do this by, using your not even 10, 7 quarters. 7 quarters is almost 2 years of revenue at the current rate. Of course, if revenue goes up, which it will go up, I think I have here the consensus that the street expects for revenue. So if you look at the consensus for the next 8 quarters, so that's going to be up until mid-27. Wow, not bad, huh? Revenue going up by 20%. Not bad at all. Wow. 34% in Q4 2026. Wow. Yeah, there is an acceleration, definitely. This looks extremely attractive, I gotta say, And this is the EPS consensus. Wow. Next year is going to be a big year for the company. Let me switch to the annual outlook. So on an annualized basis, we have October 26, EPS going up by 30% year over year to $8.07 per share. Not bad. So we have growth this and next year, explosive growth, that is. And this is encouraging, I gotta say. The company is growing, all right? The company is in the right sector. The company is, of course, this growth is mainly due to the AI-related products. We're gonna see them in a moment. But so far, this is encouraging. And revenue, of course, if you look at the yearly, up until the end of 2026. After that, it seems that it's going to slow down. I'm not sure why. Maybe the spike could be related to the Rubin, Nvidia's Rubin at the second half of 2026. And maybe there isn't that much certainty on what chips they're going to have. Well, we'll find out. I'm not an expert on Broadcom, so let's go step by step. Q4 guide, the revenue, the revenue growth, it's expected at 24%. So 22% in Q3, 24% in Q4, not bad. And the adjusted EBITDA margin, 67%. Also interesting. Now let's look at margins now. I'm just curious. So if we go to ratios, I'm going to look at margins to see what's going on with margins. I always like to start with gross margin, and this is not attractive. So gross margins are going down. They peaked earlier this year, 68%, the same percentage in May. And there was a decline here. I don't like this. So if I go now to the downside analysis, all right, let's see, do we have anything? Non-AI semiconductor, slow recovery, uneven end market trends, limited visibility. Let's see if we have anything on margins. Gross margin pressure from lower margin mix. XPUs and wireless. All right. Q3 consolidated gross margin was down 100 basis points quarter over quarter. Exactly. That's exactly what we are seeing here. Down, approximately 1 percentage point. Semiconductor gross margin approximately 67%. All right. 67%. That's similar. Interesting. So the semiconductor segment gross margin was the same as the consolidated gross margin of the company. Strange, huh? And this was down 30 basis points. That's nothing. Year over year on product mix. Q4 consolidated guidance is down 70 basis points QOQ. So approximately, they're guiding another decline in margins. Wow. Primarily from higher mix of XPUs and wireless. Very interesting. So the CFO said that wireless quarter is seasonally heaviest. I believe that's going to be Q4 for wireless. XPUs and wireless have generally lower margins. All right, so that makes sense. If you have an increase in XPUs and wireless sales, then you're screwed because gross margins are going to go down. Let me show you how I do a deeper analysis on what's going on. So I copy that. I open a new chat. By the way, this is the premium version of ChatGPT. I think the consumer free version, I'll never try. It's not that I never trust that, but when you look at the models, if you use Thinking Mini, Instant, forget about accurate answers. You need to use either Thinking or Pro. Pro, it's a little bit of an overkill right now for me. I'm not considering to buy $200 a month. It's fine. I could make the return easily. In fact, I am right now way over 200, way much more than 200 a month. But so far, I'm happy to maintain my gross margins. There you go, business. What the heck do I know? So let me show you how I will dive a little bit deeper into XPUs and wireless. Now, XPU and wireless, explain in details why they are depressing gross margins. Okay, August 2025. There is a nuance here, by the way. If you don't say the date, ChatGPT thinks that you are in. I think the cutout for the training was December last year or October last year, somewhere around in Q4. So if you don't say what date is today, ChatGPT is going to do the analysis. So it's going to research why XPUs and wireless are depressing margins considering this information. But they're going to look at 2024 because ChatGPT doesn't know that you're in 2025. It's super stupid. I know. This thing is smarter than pretty much anyone I know. However, it's not able to recognize which date is today. So this is one of the guardrails that I have. Always use the date, or most of the times use the date. Now, in the meantime, let's see what other upsides we have. So far, we know that gross margins are going down, revenues going up. Okay, I just want to know whether gross margins going down is something that should be concerning. Is this concerning? What's the reason behind that? So, accelerating AI semiconductors and XPU wins. You know what? XPU. Let's see a little bit more. Can I do something very interesting? Explain in full details what are XPUs in the context of Broadcom. There you go. This is a trick. You see, I don't have to write anymore. Another nice trick, and that helps you out with your research. So here we have the reply to the previous question in regards to why gross margins are down. Right, let's see. So we got the XPUs, that's the custom AI accelerator silicon, DPU, NPU, APU, high cost ingredients. Okay, tend to be huge dies on leading nodes, all right, N5 to N3, often bundled with HBM3 memory and advanced packaging. Wafer memory and packaging costs consume a larger share of the average selling price. All right. So the gross profit per dollar of revenue is thinner than in switch, PHI, or optical parts. Interesting. So the input costs are higher because of the wafer, the memory, and the packaging costs. Interesting. So it seems that this is one of the highest selling products that the company has, yeah? Customer power and pricing model. XPUs are frequently custom for a few hyperscalers. In fact, the company has only 4 clients. I know that because I read the earnings call earlier. 3 clients initially. They signed the 4th one in the last quarter. All right. So I believe that, yeah, they give them discounts. Ramp leading penalties. Early ramps suffer yield, learning, scrap, and under absorption. Pass-through content. All right, wireless. Let's see wireless. Radio frequency modules and combo connectivity. See intense price competition. All right, so this is nothing to do with data centers. This is for consumers. And large pass-through of third-party packaging content. So that keeps gross margins structurally lower than enterprise data center silicon. Single large customer dynamics, the seasonal smartphone ramp. Right, I understand what this is. That's for smartphones. Yeah, that's for the network connectivity of smartphones, and I believe most of that is for Apple, because I think Apple is the largest client for Broadcom. So that is the heaviest of the year and typically comes with annual price downs in exchange for volume visibility. In quarters where wireless dominates, corporate gross margins compress. It makes complete sense. The iPhone 17, is it a 17 or 16? I don't have an iPhone, man. iPhone 17, you gotta be kidding me. It's the iPhone 17. Now it makes sense why management said that there is seasonality. So he said wireless quarter is seasonally heaviest, Q4 that is. And Q4, it means, I think it's the quarter ending in September, or quarter ending on the 30th of September. And of course, that's where you have the ramp in iPhone 17. And it's very likely that the company is going to have a hit on margins because they're going to sell a lot of units and they're going to ship them possibly to India, which is where they're gonna manufacture these models, of course, to sell them to the US, because the models that are going to be sold everywhere else, you're not going to send them to India. You're going to send them wherever you want. China, Vietnam, doesn't matter because Europe doesn't have a tariff on Chinese imports, or does it? Well, topic for another day. Let's move on. Now that we are here with the downside, let's look at the first one just to cover it. Non-AI semiconductors. Yeah, so we have a slow recovery, uneven end market trends. Okay, this is concerning. So non-AI semiconductors, demand continues to be slow to recover. Q3 non-AI semiconductor revenue was flat. Q3 broadband was up, enterprise networking server storage was down, wireless and industrial was flat. Yeah, so the mix is all over the place in this segment. Q4 guide, so for non-AI semiconductor products, we have a low double-digit quarter-over-quarter increase. Not bad. So that's 4.6 billion. But enterprise networking remains down quarter-over-quarter. Management characterized the recovery as a U-shaped, meaningful recovery, not until mid-late fiscal 2026. So that's going to be anywhere between spring next year and, well, the quarter ending in September 30th next year. Visibility is not clear. Interesting. So the bookings in non-AI were up by 20%, but management cautions we have been tricked before. That sounds sketchy. Let's see, what's that? But they have been tricked before. So I'm just going to copy paste it and, this is the Q&A. Let's understand a bit more. So that's the question. Are you starting to see that in your order trend, your order book, just because your lead times are like 40 weeks, right? We are, but we have been tricked before, but we are. The bookings are up, and they are up on year over year. Nothing like what AI bookings look like, but 23 is still pretty good, right? I mean that they have been tricked before. Okay, let's ask AI. Let's ask AI. Do you think I'm going to spend 3 hours doing the research? No. Let's see. In the context of Broadcom, explain the following excerpt from the Q3 2025 earnings call. Particularly, I want to know what management means by they have been tricked before. All right, let's see what's going on. In the meantime, XPUs, let's see what are the XPUs. So these things are umbrella term for accelerators. Shit, I should have known that. Broadcom uses XPU as a catch-all for all accelerator processors, okay, GPUs, TPUs, NPU, okay. You will see this usage in Broadcom's networking posts and product briefs. Connect XPU nodes, okay. So these are the nodes that connect these accelerators. That makes sense. So their own custom AI chip. When Broadcom says AI XPU, they're usually talking about their customer-specific AI accelerator that Broadcom co-designs and manufactures. ASICs for training inference at hyperscale, yeah. They are not off-the-shelf GPUs, they are bespoke chips for a single customer's model stack. All right, so these are custom AI accelerators. Perfect. So they are made at Taiwan Semiconductors. Broadcom has publicly talked about taping out 2nm AI XPU design to this flow. When was that? Seems like it was last year, no? 2nm? 2nm. Nah, it's too early last year because I think this is a recent node. Let me just do another search. Control F. 2nm. Nanometer. There we go. So this was in. What? Yeah. July. In Europe, you use the month in the middle, not at the beginning of that date. So that's why I was confused. What? Is that 2 days in the future? Anyways, wrong side of the Atlantic. Let's go back to this topic. I'm quite curious to see what was going on. So now we understand the XPUs, okay, AI accelerators, and yeah, most of the costs. Yeah, that makes sense. Most of the costs are passed through to consumers, so they have lower margin. Tomahawk and Jericho 3 AI are marketed to scale clusters, XPUs using Ethernet rather than InfiniBand. That's Nvidia solution, by the way, for networking. Okay, so this is very interesting. Why do you do XPUs? A growing custom silicon line, Broadcom highlights XPUs as a core growth engine, a custom AI accelerator business serving a small number of very large customers. Broadcom has said 3 current customers without naming them. Analysts and press frequently connect this to major hyperscalers. Yeah, and there was a 4th one, by the way, in the last call. Real, very large chips. Coverage of Broadcom demos has described massive XPU chips built for consumer scale AI companies, underscoring the bespoke, super ASIC nature of these parts. Well, interesting. Let's understand what's going on with that trick before. Okay, so he was responding to an analyst that was asking the question. We've already seen it. We've been tricked before. When he says we've been tricked before, he's warning that early upticks in orders for non-AI chips have given false signals in the past. They looked like the start of a broad rebound, but later fizzled due to push-outs, lumpy enterprise demand, or channel inventory noise. So orders are improving, but management won't declare a real, durable upcycle based on a few months of better bookings. Caution is consistent with his broader remarks that only broadband shows a sustained uptrend so far. And that 23%, okay. So management isn't calling a broad non-AI recovery yet. Past head fakes make them cautious. Okay, interesting. So yeah, there isn't a recovery. They seem to be quite conservative with non-AI products. Speaking of which, the guidance is flat year over year. And if we have a look at the semiconductor segment, so let me just go back here to segments, and we look at semiconductors. And I'm going to look at the year over year change. Semiconductors. Wow, that's crazy. So semiconductors, this segment is made from AI and non-AI products. I believe the non-AI products are wireless chips that are being used in smartphones, possibly the iPhone 17 in this case. And of course, AI refers to data center products, possibly that Tomahawk or Jericho, I don't know how you pronounce it, network chips. So yeah, even though they say it's going to be flat, there is an increase in semis. So that means that AI semis, as you can see here in the upside, wow, 63% upside. That's crazy. So let me understand. Q3 AI semis, the revenue is 5.2%, okay? Non-AI was 4 billion. Of course, the sum is 9.2, which if we go to the chart, it's going to tell us 9.2, exactly. All right, so more than half of this revenue comes from AI products. And I believe that AI products are the ones that are driving the growth upwards. Let me just have a quick look to see whether the other segment is driving growth. So semiconductor was driving growth at 26% in the last quarter. And if we look at the infrastructure segment, wow, that looks bad. It doesn't, because this is VMware. That's why it's up, because of course infrastructure went up in this time period due to that unfair comparison. And if you look there, okay, 47% year over year growth. It's still a lot. It's 17%. I mean, it's not, the trend this year is not encouraging, I got to say. I want to see revenue growing at least in the low 20s, but it's not bad. I mean, we're talking about 6.5 billion. So 6.5 billion, and the company is growing at, almost low 20s. Okay, that's fine. That's fine. So AI semis, this seems to be dominant when it comes to when it comes to the top line, at least in the semis segment. 10 consecutive quarters of robust growth. Semis segment, 9.2 billion. Yeah, makes sense. It's the sum of AI and non-AI. Up 26%. Q4 AI semis. Okay, the guide is 6.2 billion. Up 66%. Wow. So from what I'm seeing, this is higher than this. They are projecting growth to continue to speed up for AI semis. That's very interesting. XPU was 65% of AI revenue in Q3. That makes complete sense now. Great. So the decline in gross margins makes sense because XPUs are over half of what's driving growth. Okay, so 65% of AI revenue, all right, are XPUs. And AI revenue is what is driving the growth, as we have seen, the 63% year over year versus non-AI, which was flat, 4%, 4 billion, in the last quarter, and flat sequentially. So yeah, that's why gross margins are going down. And that's why they guided margins, I think we have it here, at 67%. Sorry, that's for the semiconductor segment, 67%, down 30 basis points. It's not a lot. And this is the one. Consolidated margins were down by 100 basis points. We know that. The guidance, this is what I wanted to see. This guidance is down 70 basis points quarter over quarter. Wow, that's not a lot. So essentially, the way I'm seeing Broadcom right now is the company is growing revenue in the AI, particularly driven by AI semiconductor, by the product line in AI semiconductor. And given that most of the revenue is coming from XPUs, which are 65% of the AI revenue, okay, the XPUs have lower margin because they have higher production costs. From what I saw earlier, we're seeing that, they have high cost ingredients. Well, they have high cost wafer, memory, and packaging costs, and that consumes a larger share of the average selling price. So the gross profit is thinner, exactly, because the input costs are too high. And that means the bottom line is going to suffer, even though the top line is going to go up. That's really interesting. That's really, really interesting. So the fourth, there we go, the fourth XPU customer, and this is the ramp, and I believe that's why they project such a continuous growth, in the AI semiconductor subsegment, is because they signed the fourth customer, over 10 billion of AI rack orders. I want to understand more. So was that, what did the customer sign the 10 billion contract? I'm curious. Let's see what does it mean, more than 10 billion. Let's go back to the quote. So here, where do they say 10 billion? So we have secured over 10 billion of orders of AI racks based on XPUs. Let's go to the core to have more context. So now, further to these three customers, the three customers in XPU I mentioned earlier. As we had previously mentioned, we have been working with other prospects. Last quarter, one of these prospects released production orders to Broadcom, and we have accordingly characterized them as a qualified customer. In fact, they secured over 10 billion of AI order racks based on our XPUs. Okay, so this is not one customer, all right. It's all the customers. That makes sense. That makes sense, because I was thinking that if one customer, it's 10 billion, that's a lot in one quarter. All right, and reflecting this, we now expect the outlook for fiscal 26 AI revenue to improve significantly from what we had indicated last quarter. Not bad. Not bad. So maybe that's why shares popped before earnings. Oh, they're coming down. They're coming down. Uh-oh. A pullback. My gosh, if I see a pullback, if I see this pulling back to, let's say, low 300s, I'm probably going in with calls. There is little doubt I'm going to do that. In fact, this chart reminds me very much to Microsoft. Check this out. If you look at Microsoft, look at that. You got earnings. Yeah, earnings were on Wednesday the 30th. Earnings pop, bam. Post earnings, the price decreased a lot. It pulled back to pre-earnings close. In fact, it's down. Oh wow, it's down a lot today. Oh, what's going on today? What is going on today? Are the broader markets selling off? They are. Wow. Okay. I'm just curious. You know, when I see this, I gotta go to see the news. Wall Street major average slide after briefly tagging record highs as payroll data lands. Okay, disappointing August jobs report likely to improve. What? Is this because there is uncertainty with jobs? Friday that the weaker than expected August non-farm payrolls report was a little bit disappointing, although he sees improvement from here. I expect it's going to revise up, director of the National Economic Council said in an interview with CNBC. Okay, unlike July's upwardly revised reading, yeah, which was a very big controversy because, for fuck's sake, if you are basing your decision on rates on data that's all over the place, how the fuck are you gonna take a data-driven decision? Damn. The payrolls number for June flipped to negative to minus 13,000 from plus 14. Yeah, exactly. So this was in July. I was thinking that happened the same. No, so what happened in August? Traders are now fully pricing a rate cut in September after the lackluster report. That's great news. In fact, I'm very happy that only 2,000. Yeah, I'm very happy that only, so below expectation, a number of jobs that were added in the last month. And the reason is because that's going to give Powell a fucking great reason to cut down that interest rate. And of course, if that goes down, this is going to fly. Yeah, it's quite a big shock. I gotta say, it's quite a big shock for stocks. Maybe they're gonna sell off. Who knows? Maybe here. That would be the next stop. The next logical stop right now, at least for Microsoft. But I mean, if you look at the SPY, probably it's not gonna be a big difference. Yeah, the SPY. It's a big decline. A big one-day decline. I haven't seen that since the end of July. Anyways, it's just noise. I'm not worried at all. As soon as Powell is going to cut the rate, this is going to rally to all-time highs. So, noise. Sorry for deviating, but that was really interesting. So, going back to the point with Broadcom, and I think that this decline is mainly driven by the broader market sell-off. That's why it's important to look at macro. Do you understand now why I look at these things, at news and what's going on with our stocks? Because if you see this, after earnings, it's probably driven by the company. It's not a macro sell-off. But when you see the same decline happening in Microsoft, Nvidia, you don't have to be really smart to see that any stock in the US market is going red. Nvidia, tell me one, anyone. Meta, red. I can assure you, everything is red today. Sorry. There you go. Everything is red, and it makes sense. Okay, perfect. High beta, and I believe Broadcom has a really high beta. I mean, if you have a look at the numbers, let me just look at the beta that Broadcom has. Wow, 2.37. That's a lot. So if the S&P goes down by 1% in a day, on average, Broadcom goes down by 2.37%. That's what this number means. And yeah, market cap 1.4 trillion. Just to give you an idea, that is more than Tesla. So that gives you an idea of where Broadcom is. All right, so moving on, we got AI networking leadership on Open Ethernet. Okay, so Tomahawk 6. And we've got, sorry. So this seems to be one of the products, Tomahawk 6 and Jericho 4, the fabric router. All right. It's better than the NVLink and InfiniBand. Very interesting. And that's the previous model. So the upgraded Tomahawk 6, lower latency, and it has much less power. This could be a good catalyst, the Tomahawk 6. Because if the Tomahawk 5 is already better than NVIDIA's NVLink and InfiniBand, not bad. Not bad for a catalyst. All right, looking at the infrastructure segment, we have Q3 infrastructure software revenue up 17%. Yeah, we saw that earlier in the chart. Overall, the trend that I've seen there is not attractive, so 17% in the last quarter, but it's slowly going down compared to February and May. And by the way, these are fair comparisons because you're comparing February 25 to February 24, and in February 24 you had VMware. So that's an organic growth, and it's not, the effect of acquisitions. All right, so that came in above the outlook by about 100 million. Total contract value bookings came in at over 8.4 billion in Q3. VCF, I believe that's the VMware Cloud Foundation version 9.0 was released. It supports AI workloads on VMs and containers. And that's fully integrated for on-premise or cloud. Wow. Way over 90% of the top 10K accounts have bought VCF. Q4 software revenue guide, 6.7%. Up 15% year over year. Okay, so that's the guidance for the infrastructure segments. Not bad, but it's still a decline. I mean, 15% year over year in Q4 is still a decline for 17%. It's a sequential decline. So, yeah, I'm not that keen on infrastructure going down. Seems like it's dragging down the growth of the company. Margin outperformance, some software margin expansion. Q3 gross margin 78%, better than guided, but still lower than sequentially than in Q1. Sorry, Q1, Q2 is the same. Adjusted EBITDA, 67% of revenue. That's a very good margin. And that was above the guidance. Okay. Infrastructure software gross margin was 93% versus 90%, I believe, in the same quarter last year. So that's 3 percentage points. That's a good improvement. And the margin is crazy, 93%. It's software. Yeah, it's software. Good point. But nonetheless, it's a big margin. Looking at cash flows, Q3 cash flow was 44% of revenue. That's a really good free cash flow conversion. Wow. Not bad, huh? Not bad. In fact, if you look at profitability, let me just see something. Let's look at profitability metrics. Because cash from operations, not bad, huh? Quite good compared to the sector median. 120 million is the IT sector median. And the company pulled 23.24 billions. Not bad. Actually, the net income per employee is also really good for the company. 350,000 per employee. Wow, not bad. And that's net income. That's not income. It's net income after you pay the employee and all the expenses. CapEx. I'm just curious. What's doing the company on CapEx? Are they investing? I think no. They're fabless mostly, I believe. I can tell you the answer by just looking at CapEx, capital expenditures. Yeah, fabless, 142. Very, very little CapEx. Right, that's good. So they don't burn that much money in CapEx, and that's why they have very good free cash flows. Good. Non-AI semiconductor sequential uplift and improving orders. Yes, so Q4, the guide is 4.6 billion. Low double-digit sequential growth, all right. broadband, server storage, and wireless to improve on the top line, but on the bottom line, particularly wireless, is going to drag down the gross margin. Booking is up by 20% year over year on non-AI products, and there is early signs of a cyclical recovery. But as we have seen in the previous section on gross margins, the company said, where was it, that they don't want to be fooled again. How was their quote? I think it was here. We have been tricked before. Yeah, so that's a very interesting phrase, and it's hedging. The language is absolutely hedging, and the company is trying to calm the expectations down. Calm down. Great. What else do we have? 2026 AI growth expectations to accelerate. So management now expects fiscal 2026 AI growth to accelerate versus 25's 50 to 60% growth cadence. Wow, that's a really big ramp, huh? Is that for the entire year? Yeah, it's not just for the first half, it's for the entire year. That's got to do with Rubin. I'm absolutely sure that's got to do with either you have both AMD and Nvidia, which are releasing GPUs almost at the same time. Nvidia is ahead in the race. It's got to do with Rubin. It's very likely. I mean, if you look at the quarterly revenue expectations, you see, so the quarter ending in July 2026, that's 40% increase in the top line. And the same happens for the one ending in October. And coincidentally, that's when Jensen Huang and the team at Nvidia projected the ramp for Rubin. That's volume production, by the way. Currently, they are in pre-production. They sent samples in Taiwan Semiconductors. And in the last earnings call, they did mention that the company is in the pre-production phase. And I'm very curious to see what's going to happen from that phase, because some reports were rumoring that possibly there's going to be a delay. In the last earnings call, which was last week, Jensen noted that everything is on track. But rumors are important, at least in my investment style. So something to consider. And yeah, you can see there the spike in revenue, 36% and 34%. That's got to be the freaking Rubin. There's no other reason. All right. Mix shift to XPUs as share rises are existing 3 and of 4 significant customer ramps. Exactly. So we're already seeing the mix towards XPUs, and this was the reason why gross margins were going down. 10 billion XPU order provide fiscal 26 revenue timing. That makes sense. So these are the orders. What do you mean orders? Is there more than an order? It's got to be more than an order. I mean, the backlog is 110 million. Don't get me wrong. It's got to be more than one. What's going to be those 10 billion, man? I want to know. Was this a one contract? 10 billion? And our current consolidated backlog for the company hit a record of 110 billion. Exactly. So they have secured over 10 billion of orders of AI racks. Yeah. So that 10 billion backlog that you mentioned, okay, this is the remark. But to a large extent is the 4th customer that we now add on to our roster, which we will ship pretty strongly in 2026. So a combination of increasing volumes for 3 existing customers, and we move through that very progressively and steadily. And the addition of a 4th customer with immediate and fairly substantial demand really put up our really changes, or whatever it means. So yeah, they have enough backlog, and revenue is going to tick up next year because they're going to burn through the backlog. Leadership through 2030. Okay, that's the usual bullshit. And yeah, this was one of my questions. So why infrastructure margins were up? And the reason is exactly, so operating margin went up to 77% in the last quarter compared to 67% a year ago. And that was due to the completion of the VMware integration. And of course, that also was the reason why gross margins increased 300 basis points in just a year. It seems that infrastructure is driving margins and semis are driving the top line. So yeah, it's a good position to be in, because infrastructure, maybe it's not as exciting as semis from a revenue perspective, from a revenue growth perspective, but they're supporting margins. That's really positive for the company. I like it. Now, valuation, I'm not going to look at it because who cares about valuation? The stock is overvalued like anything else. Who cares? Forward PE 111. Who cares? Is anyone looking at this? So I argue valuation matters when the broader markets are selling off. That's when you need to look at that. But the pop today, it went up. Let me just see. Well, how much was the pop today? 16%, right? And the forward P ratio in the 100s. Stock goes up regardless of the valuation if it has a good narrative. And I think that this has a good narrative. If you look at the downside, let's see what else can we find. Slower cash conversion from 32 to 37 days. 5 days, that's noise. Strategic total addressable market limitation and customer concentration in AI. The company doesn't target enterprise AI workloads, which is great because enterprises are not adopting AI. Wait, what? Are not adopting AI at the scale that many people believe they are. And they don't build data centers. Enterprises, they want to rent the GPUs from data center infrastructure companies or hyperscalers. They don't want, management says, we don't address the market. It's a hard market. We're not set up to address that. Great. I like the management, but who was this guy? Who was this guy? The CEO. This guy rocks. All right. Highest paid CEO in the US in 2023. 161 million. I believe that's a salary. They probably don't take into account as well the share stock-based compensation. But yeah, interesting metric. The highest paid CEO. Well, after this statement, I think that he deserves 160 million. Addressed market is very few, narrow, only so few players. Makes sense. You only focus on the hyperscalers. Yeah, they have 7 identified customers. 4 customers now, 3 prospects. May see 1 more perhaps, but very selective. So overall, they're targeting 5. And I'm thinking these are the 4 hyperscalers, and possibly I don't know who's going to be the other one. You can ask AI. Let's do this exercise. So let's copy that, bam, open a new chat. Check this out. In the context of Broadcom, I want you to tell me who those 5 potential customers could be. I believe these are the 4 hyperscalers, and which could be the other one. Let's see. Right, in the meantime that this loads, let's go back to the headwinds. So we have, the VMware. I don't know how you pronounce it because I'm not from the industry. But it seems that this is a software, possibly. Deployment lag at top accounts and uncertain mid-market adoption. Way over 90% of the top 10,000 accounts have bought VCF. Okay, I believe it's a software product. Now I have to check it. Private cloud platform. There you go, software. Deploy a cloud operating model that combines the scale and agility of a public cloud with the security and performance of private cloud. Okay. Software, high margin. VMware has a high margin. So purchases doesn't mean they are fully deployed. Okay, so he's saying that the clients bought this VCF, but they didn't deploy it yet. Significant execution required. Enabling customers to deploy, operate on-premises private cloud is the hard work over the next 2 years. On-premises. Okay, infrastructure segment, not in semi segment. Okay, that makes sense. Mid-market, next 20 to 30,000 customers. Management don't expect it. They don't expect it to be necessarily successful in the mid-markets. Lower TCO benefits, lacking skill sets to operate adoption outlook. We shall see. We shall see. Okay, that doesn't sound very bullish to me. And this is in the infrastructure segment. Okay, not very bullish there. Competitive pressures in XPUs and Ethernet necessitating sustained high investment. Ethernet switching is competitive and substitutable. They can find somebody else if they don't like us. Wow. XPUs face active competition, and I believe I know from whom. To defend position, Broadcom must out-invest and out-innovate and keep investing to outrun the competition. All right. That's why they can't hike the prices. Now it makes sense. So you have high input costs for the XPUs coming from HBM3, advanced packaging, and then you have the dies on leading nodes. Yeah, so N3. This is Taiwan Semiconductor's process node engineering. Now, this is starting to make sense because if you have high costs, why you don't increase your prices? And I think I know why. It's because possibly Dell is going to provide a better price, and the company is going to lose the customers. All right, that makes sense. That makes a lot of sense now. Broadcom is not like Nvidia, where they can put whatever price they want and people are going to buy it. So they don't have that much pricing pressure. I'm just curious now. Let's find out. So in the context of Broadcom, explain who are the top competitors for the XPUs. You see, that's how you use AI. You talk to AI. Right, what's going on? So we've got who the customers are. OpenAI. So these are the 4 hyperscalers. OpenAI, I know they're building data centers, but my God, that's very interesting. Why OpenAI? Multiple credible reports say that Broadcom just landed damn. The 10 billion contract that I mentioned before, it was here somewhere. This contract is OpenAI. That makes sense now. So 10 billion custom AI chip order from a new customer widely believed to be OpenAI. And I believe if we go to Bloomberg, and that's going to give us the 10 billion somewhere. There you go. Dan said the company has secured more than 10 billion in orders from the new customer, which the person identified as OpenAI. Nvidia stock was down by 4.3 because since May. Oh, wow. Nvidia was down by 4.3. How is doing the stock? I'm just curious. I think we saw it earlier. Yeah, it's pulling. Yeah. Not concerned. I am concerned, not much. I'm concerned because it broke down the 170 level. That's not particularly attractive. I have to say that it's a pullback, and I wouldn't be surprised to see the price going down to 150. Low 150s. I wouldn't be surprised, to be honest. And from there, it's going to be a very strong buy. Interesting. So, yeah, the market didn't like the jobs report, huh? Going back to the topic, yeah, the CEO made references to that partnership on Thursday when he said Broadcom has secured a new client, which the person identified as OpenAI. Interesting. Okay, perfect. So that's good. I like these clients. I like it a lot. And I'm very happy if the company just keeps them as is. Moving on, we've got the XPUs, and we have, all right, the NVL72. Okay, that's a big competitor. General purpose AI GPUs, hyperscaler AI A6. Okay, that's the Google TPU, Trainium. Okay, for accelerators beyond plain CPUs, most often than AI GPUs and custom AI chips. Competitive map. So what I don't understand. So I want to understand exactly what Broadcom's XPUs are. So how do they differentiate from the GB300, for example? Do their XPUs integrate the Blackwell 300 GPU with maybe an AMD Instinct CPU? Or what is that XPU? So I want to understand in that case. Because the reason I'm asking this is because most likely XPU means that they do whatever they want. They can do a zombie AI accelerator, meaning that instead of using the Grace CPU, they could use, the Blackwell GPU from Nvidia. They could use AMD's or even Intel's CPU. So they could make a very interesting combination. Huh? So the ecosystem, all right, CUDA is the deepest, AMD ROC, and AWS Neutron. Nvidia Bluefield 3. Oh, I don't know this one. AMD Pensando, yeah. IPU 200, 2000 are the main pairs of overflowing. Okay, let's see when this loads. That's going to be very interesting to find out. In the meantime, looking at growth, as I said, everything looks good. Either the top line or the bottom line is above the sector median and above the 5-year average. So it makes sense why shares are up by a lot. And I'm really curious to understand what's going on with those XPUs, just for curiosity. And I think we cover most of the upside, most of the downside. And I'm just curious to see what is the options market doing for Broadcom. And I don't think there's going to be much insider buying. Sorry. Wow, there's a lot of insider selling. I don't like that. CEO, okay. Possibly this is a planned sale. Maybe he does that every month. Yeah. But these are large transactions, It's not really attractive, I gotta say. Maybe there are planned sales. Yeah, so nothing to worry in that case. But yeah, wow, 1%, and the guy made 125 million in that sale. Who's this guy? Chairperson of Broadcom. Co-founder of Broadcom Corporation. Wow. Imagine that, 12 billion. Is that 12 billion? Yeah, 12 billion will be 100% of his position. Wow. Not bad. Options markets, you got a lot of puts, that's fine. There could be hedging for long positions. There you go. So Broadcom XPUs, we've got custom AI accelerator, A6 co-designed for a specific hyperscaler. They're not built from Nvidia or AMD parts. They are bespoke chips that Broadcom packages using its 3.5D Nvidia GB300 and off-the-shelf Nvidia rack scale, pairing Blackwell Ultra with Grace CPUs. Okay. Broadcom's public material focuses on the package platform, not the customer's secret compute cores. So multiple compute dies, lots of HBM. These parts are customer-specific accelerators. Okay. Architecture and components, we have the GB300s, Nvidia Silicon only. It's not a mix and match with AMD or anyone else. In contrast, Broadcom XPU is a custom single accelerator chip that doesn't use Nvidia Blackware or AMD Instinct at all. Very interesting. GB300 is sold broadly via Nvidia partners. So AMD Instinct is AMD's GPU brand, not a CPU. EPIC is the CPU. Broadcom XPUs don't integrate a Blackwell GPU with AMD, with an AMD Instinct CPU. They are their own custom accelerator chips, separate from NVIDIA AMD products. Wow, okay. That's really interesting. So they compete with general purpose AI GPUs. Broadcom competes with the GB300? Wow, that's interesting. Wow, okay. Well, this is something I learned today. So Broadcom is there with NVIDIA and AMD, huh? Very interesting. Not bad. Very interesting. It's networking segment. All right. Overall, I think that's it. It's a lot of analysis, to conclude, what I'm seeing is an increase in the top line. All right. We've already seen that in one of the tabs. Let me go back to the street's expectations. So we have earnings ticking up for the next 3 years until the end of 2026. Earnings, the top line goes up, mainly driven by the AI segment, which is projected to increase at 66% in the next quarter. And what we have is that most of the revenue in the AI semiconductor subsegment is driven by XPUs. XPUs, they have, let's say, a bad margin, not very bad, but it's diluting margins on a net basis. And that's bad because the more revenue you create, the less gross margins you're going to have. So there's a slight trade-off. That said, the street is projecting a nice increase in EPS. So even though gross margins go down, I think the company is going to compensate for the decline, possibly with cost improvements. I like the EPS projection. So overall, I think the bull case makes sense. And from a price action perspective, if this touches back the low 300s, I know, I like it. I see it as a buy. So let's see what happens. Good. That's it for the video. Thanks for watching. And yeah, I'll see you in the next one.